January 2026 will be remembered as one of the most remarkable months in the history of the global gold market, as the precious metal reached extraordinary highs, experienced sharp fluctuations, and revealed the complex interplay of economic, political, and market forces shaping investor behavior worldwide. Throughout the month, gold exhibited a powerful bullish trend, driven by sustained safe haven demand, geopolitical tensions, and shifts in macroeconomic expectations. At the same time, the latter part of January brought dramatic corrections and volatility as market sentiment shifted in response to major policy developments and profit-taking activity among investors. What unfolded in those 4 weeks illustrated how deeply interconnected global markets have become, with forces from central banks to political headlines influencing the price of gold on an almost daily basis. The year opened with gold already elevated after a historic rally in 2025, a trend that carried momentum into January. In the first trading days of the month, gold prices climbed steadily as investors remained cautious about the global economic outlook. A combination of lingering inflation concerns, slowing growth in major economies, and persistent geopolitical friction encouraged capital flows into what is traditionally seen as a store of value and risk hedge. This safe haven demand was reinforced by a weakening US dollar early in the month, which made gold more attractive to holders of non-dollar currencies, further boosting international demand. Traders and analysts observed that central banks were also significant buyers, diversifying reserves away from traditional currencies into bullion, which tightened physical supply and supported price gains. These dynamics, emerging from both market fundamentals and technical buying patterns, helped propel the metal higher during the first half of January, contributing to one of the most powerful early-year rallies in gold's history. As the month progressed, geopolitical uncertainty intensified, amplifying the safe haven narrative. Heightened tensions in regions such as the Middle East, ongoing conflicts, and strained diplomatic relations between major powers added a risk premium to gold prices. Investors across continents watched closely as news events outside financial markets began exerting outsized influence on precious metals. These geopolitical factors, combined with fears of a slowdown in major economies and debates over interest rate directions, stirred demand among both institutional and retail investors. By mid-month, gold had climbed past $5,000 an ounce, an unprecedented level that underscored the extraordinary demand in global markets. Precious metals broadly were also buoyed by these trends, with silver and other base metals seeing significant gains alongside gold's ascent. Towards late January, the gold market reached truly historic territory as prices surged above $5,500 per ounce, touching all-time highs. This breakout reflected both the momentum of the earlier rally and the extraordinary investor appetite for gold as an alternative asset amid global volatility. Many analysts pointed to the combination of central bank buying, geopolitical risk, and expectations of continued economic uncertainty as key drivers pushing the metal to these record levels. As gold prices raced higher, trading volumes around the world spiked, and market participants adjusted strategies to manage exposure to the rapidly rising asset. Headlines about record prices dominated commodities news, with some markets reporting double-digit percentage gains year-to-date in just the first weeks of January. However, the narrative shifted dramatically toward the end of the month. What had been a steady uptrend gave way to sharp volatility driven by a major political development in the United States. On January 30th, 2026, news broke that President Trump intended to nominate Kevin Warsh as the next Federal Reserve Chair, a move that caught markets off guard and triggered a swift reassessment of monetary policy expectations. Warsh, known for a more hawkish stance on interest rates from his previous tenure, was widely perceived as likely to maintain or even tighten monetary policy rather than pursue aggressive rate cuts. This perception strengthened the US dollar and reduced the appeal of non-yielding assets like gold, prompting a significant sell-off in precious metal markets. On that single day, gold futures plunged as much as 9 to 12%, marking one of the steepest daily declines in decades and wiping out a substantial portion of the earlier gains. The volatility was so extreme that major exchanges, such as the CME Group, raised margin requirements to safeguard against further systemic risk from rapid price swings. This late-month correction demonstrated how sensitive the gold market had become to shifts in expectations around monetary policy, especially given the extraordinary price levels reached earlier in January. Profit-taking by large institutional investors also played a significant role in accelerating the downturn. After months of parabolic gains, many traders sought to lock in profits, and once selling began, it triggered liquidations of leveraged positions, exacerbating downward pressure. Analysts noted that much of the volatility stemmed not from a sudden change in underlying economic fundamentals, but from the mechanics of market positioning and rapid sentiment shifts among market participants. Despite the dramatic pullback, gold prices remained substantially higher at the end of January 2026 than at the start of the month, reflecting a powerful overall uptrend driven by global demand for safe assets amid persistent uncertainty. The market's behavior illustrated how gold continues to serve as both a hedge in times of instability and a speculative asset subject to sharp swings when investor expectations shift. The interplay between geopolitical risk, monetary policy speculation, central bank activity, currency movements, and investor psychology made January one of the most eventful and instructive months in the precious metals markets in recent memory, underscoring gold's enduring role at the intersection of global economics and financial sentiment. If you found this video helpful, don't forget to like, drop your thoughts in the comments, and subscribe to the channel for more deep market insights every week.